Ladies and gentlemen, welcome back to my channel and to another episode of Price Action Trading. It is Wednesday, and before we get started, let's take a look at the daily chart. Alright, here we're at the daily chart. Prices have made a second leg lower, working down, just like we have mentioned in previous video. The S&P 500 is in a little bit of a correction phase. Now we're having this kind of doji looking bar, but the market is overall very bullish, so let's take a look how the prices are looking on a much smaller time frame. So the number one thing before starting trading, we have to recognize current market structure, identifying the key levels. First key level is located right here. The lowest low previous day was this low right here, and we made a double bottom right here. So this serves us as a first key level that we're going to draw. And the second key level is this double top that formed in today's session. So now market is clearly looking like it's in a trading range. And how do we trade ranging markets? Buying low and selling highs, but more preferably waiting to fade the breakouts. Because like I have mentioned earlier, most breakouts of trading ranges fail. Since the market is now obviously ranging, we are looking for opportunities to buy, to get to the other side of trading range. And the best way to get to the other side of trading range is to wait for prices to come to key levels, to key entry points, my bad. And how do we find key entry point? Starting at this low. This was the lowest low of today's session. Prices have made one swing, and this served us to set a trend line, that there might be a possible trend line. And prices confirmed the trend line right here. Let us look at a little bit back. We have a new high, most recent high is higher than this high. Prices are working lower, we have a break, and a new leg to a new low. This is a two-legged move to the key entry point, to the trend line, in an sort of looking uptrend now. This bounce now have officially confirmed that this trend line is valid. First two swings just serves as a, telling us that there might be potential trend line. But this third bounce confirmed the trend line is valid, and this is a good place to go long. The prices would scare us a little bit, but we have to keep our stop below the signal bar. We're using the market structure to protect our stops. We would have been fine. And when prices try to trap one more time, bears, look, this is another entry where we can go long. Look at this beautiful reversal bar. This is so many bulls were buying at the end of the bar. And this is now officially the fourth bounce of the trend line. So this is perfect for us because we are now having prices located at our key entry point. This is the new low. Pullback, first entry, pullback, second entry. But we cannot enter right here because the signal bar is horrible. It is bearish bar, big bearish bar. But when the prices gave us one little more pullback, nice big green bar, it is still holding. The trend line is still holding. It's not letting prices to go below it. We have to take this long or more again, and we're off to the races. So the range rules are now playing perfectly. The first bounce on the EMA occurred right here, quite after quite while. But we cannot take this trade because this is just the first entry. We have to wait for second entry, we have to wait for more probability setups. The second entry occurred right here. Prices made the new high right here, pull back, first entry, horrible signal bar, pull back, second entry. EMA is still holding, EMA is pointing higher, the trend line still remain unbroken, so this is a good trade for a scalp. And now this is the key information for us as the traders. The range has been officially broken. The breakout failed instantaneously. It snapped back very quickly on this big bearish bar. But we don't want to go short just on this bar because we want to wait for more higher probability setups. And when is more higher probability setup? Waiting for lower high at this point. Or when we are buying, waiting for higher low. There are traders that I trade with that they actually take these first breakouts. They are profitable, but they have also much more losses. Now, me personally, I like to have much more winners than losers, so I like to wait for more higher probability setups and using these lower highs at this particular case to give me more of an edge. Lower high is right on this bearish bar. And you still got more room to this trend line. In case we are wrong, and this trend line will still continue, we got plenty of room before we get to the trend line, so we don't have to worry about that. But this is how market will act in the trading ranges like this. Sometimes the support and resistance are so strong that we might not even get a retest. Just like I have mentioned in my earlier videos, when the trading range is really strong, the support and resistance is really strong, the prices are so weak that they might not even get not even be retest of the new extreme of the most current trend line. So at this point, market is now working below the EMA. We are coming from the tops, from the failed breakout. So how do we trade ranges? We wait for prices to get to the other side. Notice the new low right here, pull back. First entry, first attempt by the bears to go lower, pull back, second entry. Beautiful reversal bar. This is the kind of bar that we want to see, that we would like to see. Notice how many bears were buying at the end, were selling at the end of the bar. The EMA serves as a resistance, is not letting prices close above that. This is a big sign for us. And this channel is holding prices neatly. This trend line is definitely valid because you can see how prices are this very neatly inside of this channel. So we are waiting for a new low because that's the rule of the trend lines. Most likely it is a second entry and we have a break and an attempt to a new high at this small correction. This was a good trade to take, and the prices rocketed up actually very, very quickly. I didn't expect to take off like that, but the bulls, they threw in the towel right here. But they probably weren't done yet because during trading ranges most people will buy the lows and they will sell the highs. Now with this overshoot there comes the break, and there is when I talked about this previously, when you see overshoot like this, the break is almost gonna happen very quickly and very soon. So when you see overshoot like this, in this particular instance, when the market is in a downtrend, you don't want to be necessarily looking for shorts just like that, because when the overshoot is too strong, the market may not make a new extreme. There is no setup right here according to our rules, no high probability setup. And this was a setup that a trader that I actually coach asked me, because this is very tricky setup, and I'm going to explain to you why. Look at this. This is a pullback, first entry, pullback, second entry. It is the trader went short on this setup, and I cannot blame him that much, because if you're not that experienced, it is according to rules. Even though you're inside of this channel, it is still second entry of the EMA, so there are quite some reasons to go short here. But notice the most important thing that I have found, thanks to my experience, notice how this move is super bearish, super strong, and the market almost never moves like this. 90 degrees, very strong. Market almost never moves like this. Generally market is moving more like this, kind of a little bit more slanted. So in this particular case, this lag was too bearish. This is 90 degrees lag. This is 90 degrees moves in markets are so rare, because look at this move down is much more choppy. There are much more bullish bars. The second entry here worked. Look at how clear and bearish this is. This is way too oversold at this point. So you have to be a little bit careful, because this is way too early to go short, because this is almost too perfect. You're not gonna get a move like that when you have a clear leg like this, a little bit of correction and another steep leg like this. But I cannot blame this trader. It is according to rules. Only my experience taught me this over years of watching this market. But nevertheless, if you follow the rules, you are still 6-1. And this is the percentage I like. So take your losses. Every strategy has losses, and we keep going. The market later spiked up very quickly. Actually, I thought there might have been some sort of news here, because this was such a big strong move and it took like 1 minute, 1 minute and a half. So if this was caused by some sort of news, there is no surprise that we took it all back, because a lot of times when you get a news in the market, big spike up or big spike down, the market will usually erase those news. They will erase the move, and it sort of happened right here. We spiked up very quickly and we turned down very quickly. And the final trade that I marked for today was this pullback, first entry, pullback, second entry. This failed second entry long of the trend line and of the EMA. But if this was caused by news, I wouldn't recommend trading around the news time. It is much better to wait after the market gets a little bit calm and trade afterwards. So just remember, to wrap this up, we don't look to take trades all around the market, all around the chart. We just wait for prices come to us to key levels because they are the most highest probability setups that we like. So just be patient, wait for prices to come to you. Don't just take every trade that you see, and you will get an edge. So hopefully this video was very insightful to you, and wish you safe trading. Bye guys.